Hello and welcome to ATF TV. I'm Christine Zhou reporting from London. Today we are pleased to welcome Philip Young. Philip is a partner at commercial law firm Cooke, Young and Keidan LLP in London, who joins ATF TV today to talk about the blockage of Suez Canal last month and the lessons it left for the world's supply chains. Philip, welcome to ATF TV.
Hello, nice to meet you.
Philip, as we know, the Suez Canal was reopened last month after the giant container vessel Ever Given was refloated. In the hours before the ship was dislodged, the tailbacks had reached 425 vessels, a traffic jam that took several days to ease. What do you think the knock-on impact will be on supply chains?
Well, yes, thank you for that question. It is an unusual situation that's occurred, and obviously the context to it having occurred is the COVID-19 pandemic, which has already had a significant impact to supply chains worldwide. And there were particular markets, particularly in Europe, which have already had difficulties even before the Ever Given and Suez Canal event. And a good example of that, of course, is the semiconductor industry, where a lot of businesses that are reliant upon semiconductors coming out of Asia have really struggled to be able to source the semiconductors in time. And that's had an impact upon businesses such as, for example, the car industry, which increasingly are a big purchaser of semiconductor components. I have to say, in the UK, I'm told by clients in various markets that that's slightly less of a problem than in continental Europe, because one of the unforeseen implications of Brexit was that a lot of businesses started to stockpile in the run up to the end of the last year, and they're still working through their stockpiles. And so the fact that suddenly a lot of vessels aren't able to reach them at the right time may not have quite the same impact on them as it may do in continental Europe. And also pricing implications for European purchasers, who will have to bear in mind that to the extent they've lost money as a result of the Suez Canal incident, they will have to somehow find a way to recoup that from their customers. So there's a whole series of knock-on impacts. It's a bit like dropping a large boulder in a lake. You know, the ripples sort of go out in a concentric pattern and strike all sorts of things.
Philip, the Suez shipping artery plays an important role in connecting Asia to Europe and the eastern US, and therefore many business owners felt the impact. What practical future steps can you see being taken by those who are adversely affected by the consequences of the blockage? And Philip, does the blockage of the Suez Canal have any larger implications for the interconnectedness between Europe and Asia, and in particular, the development of other alternative trade routes, for example, overland through the MENA region?
So I think anyone who at the moment is affected by the Suez Canal in a business context is going to be doing a number of things. The first thing that they will be doing is looking quite carefully, I think, at not just their logistics chain, because they'll be trying to find alternative, if they're a buyer, trying to find alternative goods if they are being badly affected by this. But looking at their logistics chain more generally, with a view to having greater redundancy built in, so that if anything like this happens again, they're not going to be quite so drastically affected as they might be being affected at the moment. And I think that's probably something that is a more general experience actually in business at the moment, because it's not just this, it is also the COVID-19 pandemic, and that's had dramatic impacts upon a lot of businesses' supply chains. Another thing that I think any business would be doing at the moment is looking quite carefully at its insurance coverage, consulting with its brokers, and where viable, making appropriate claims. It may be, obviously, if you're directly affected because you're a ship or cargo interests, then you'll have policies that may cover you for unexpected delays. And I think as well, businesses probably will want to talk where they are businesses that have traditional cash flow constraints, and they do things, for example, like factor their invoices. They'll probably be talking to their financiers to ensure that the financial backing to get over the current impact is there and it's understood. And so to the extent that, for example, rather than ship goods by sea and be at risk of any further instance like this in the Suez Canal and the risk of delay of vessels going around the Cape of Good Hope, if there is, for example, the optionality of shipping goods overland by rail, then I think they would look very seriously at that. Air is a bit more difficult because air freights have gone up because of the COVID-19 pandemic. There's a lot of goods you can't ship by air anyway, and air capacity has obviously dropped a lot because so many planes are no longer flying.
Thank you so much, Philip.
My pleasure. Nice to meet you.
And thank you everyone for watching. For more stories like this, please log on to asiatimesfinancial.com for the best Asian news on markets, economies, and more. I'm Christine Zhou reporting for ATF TV from London.